It's the middle of the year and time to get a mid-year check-in on the market. What's the market outlook? Have things turned out the way we thought they were as we entered 2019? Well, the man who joins us about every 3 months to talk about the markets and, of course, the continuing trade war with China that we've covered many times with Gene. It's Gene Goldman, Chief Investment Officer and Director of Research at Cetera Investment Management, Cetera.com, the website. Gene, I recall way back in January when you and I first talked, when the trade war drum was just starting to warm up for the dance, and we were saying, we don't have to worry about it. We don't have to worry about it. It's going to back off. It's going to go away. We're still pounding our chest. China's still pounding their chest. It seems like this trade war with China isn't going away.
Yeah. First of all, Jeff, thank you for letting me be on your show. You're definitely right. I think so. We talked in January that the trade wars would be resolved soon. The problem is that China saw some of our data weakening in the United States. They also saw President Trump and Jerome Powell, having a tit-for-tat disagreement in terms of direction of interest rates. And China viewed this as an opportunity that they thought they had a better position from a power standpoint. And what we realize is that they've sort of realized that, the Fed is suggesting that they will cut rates. They will, I think Jerome Powell last week said that rates, they will keep rates as appropriate as necessary, which suggests that they will lower rates if necessary. I think, as we talked about in January, we still believe there's 3 reasons why the trade war will be resolved. And the G20 meeting this weekend is going to be so important for rhetoric. But number one reason why economic data on both sides has weakened. So both sides are very incented to improve their economies, and you're seeing data many different ways weaker than expected. Number 2, the stock markets have been affected. Yes, we're having a great year in the S&P 500. The markets are up double digits. But keep in mind, May, when rhetoric increased during the month of May, we had a tough month in May. Also, the fourth quarter of last year, we had a tough fourth quarter as trade rhetoric increased. Also, President Trump is a huge believer in watching the stock market as a real-time indicator of how he's doing. So the effect on the stock market is important. But the third point, the most important, is why we have the advantage. As we've said before, the demographics in China have really, really changed. And China is trying to convert their economy from manufacturing to a consumer-based economy. If you have an aging population that's aging quite rapidly, it's very difficult to do that. Case in point, 2017, lowest birth rate in China since 1961. And this is pressuring their economy, which gives us a good opportunity, especially as a trade war causes havoc on their economic data points.
Well, Gene, isn't the China economy right now just as versatile and volatile as the U.S. economy? I know it's been real wobbly, and that's actually what's been helping the gas prices go down. Number one, we have more reserves here in the United States we've tapped into. OPEC had to lower their prices. But China's economy had a lot to do with what we're paying for gas right now at the pumps. They're in the same boat that we are, really, when we're looking at how volatile things are going on in the market. And this is a worldwide market we're talking about.
True, definitely. I think it's China, but it's also beyond China. I think the global economy is weak. You're seeing it in Europe, Japan. Japan has been cutting rates, has been stimulating their economy since 2013. It's globally. Specifically in China, though, it's interesting. I saw a data point that you look at exports out of China. Through the month of May, it was a year over year, exports are up 5.2%. That's good news, right? Great number, over 5%. October of last year, though, the year-over-year jump in exports was 19.7%. So both numbers are really good, but you see the dramatic drop in some of the Chinese data. This has had ramifications because their economy is starting to slow down. It's not weakening, it's starting to slow down, which creates less demand for oil. Another commodity, since we're talking about commodities, one commodity to look at is copper. Copper has fallen dramatically in price. You're looking at 2008 levels right now. And the reason is that copper is a great proxy for the global economy, especially China. China uses about half of the world copper supply, or world copper output is used in China. And so it's a great way to see how their economy is doing. And copper has fallen quite dramatically.
Gene, you brought up earlier the G20 summit that is coming up, and I read an interesting report this week that Japan and China look to strengthen ties at the G20 summit. Should we be concerned? Because that's the last thing we need is China and Japan both ganging up on the U.S. economy all at once.
I think China is trying to create agreements with every country. I think they did the same thing with Russia. There was this well-publicized trip where China and Russia, they met in Russia, in Moscow. So you've seen that. You've also seen China in Europe. You've also seen some suggestions of China in Africa. So I think China's trying to be, the next big superpower. But again, as I go back to demographics, demographics are definitely going to be hampering our economy. We always think that there's a point that China is in a race to become the world's next big superpower or the world's largest nursing home. And it's a battle right now between the two. But you're right, China and Japan, again, the more agreements China has with other countries, it definitely weakens the U.S. position. But at the same time, Japan and the U.S. are very, very strong allies, as we both know.
Well, I mean, if you look at it this way, the way I'm thinking, China reminds me of the bully in the neighborhood that has ruled the roost for years, and then a bigger bully moves in the house down the street, and all of a sudden the old bully wants friends, and he wants buddies around him, and he needs a little help. Is that what you're feeling with China right now, and why all this chest pounding is going on?
You remind me of my younger days as a kid. I was not a cool kid, so I was definitely bullied around. So I'm just kidding. No, you're definitely right, because I think, this is part of the reason why that President Trump, wanted to redo NAFTA, why he's working with Europe, why he's working with other nations, why we reached an agreement with Mexico, is that he's trying to have his own team. He's trying to bring his own friends to the playground. And you're seeing both sides do this right now. But again, the G20, you're right. The G20 is going to be so important this weekend, and news will come out, and it will make these markets volatile. Anytime
we hear about the trade war with China, or there was the trade war possible with Mexico, tariffs going up on imports, exports. You hear basically in the news, Gene, what it's going to cost the American consumer at the store. And cans of beer, aluminum's going to go up. Harley Davidson is no longer going to be able to be manufactured at a lower price because of aluminum. And we have more to worry about than the cost of consumer goods when you really look at the whole picture here. How are they going to police a trade war? Well, first of all, FedEx has filed a lawsuit against the U.S. government saying it's impossible for them to police exports to China. So if this trade war was to come fruition, which we don't think it really is, and especially in your opinion, how are they going to police it, and who's going to pay for that? And if FedEx has already filed a lawsuit, do you see other companies that are involved in shipping and trading and importing and exporting that also may become the import-export police and say, we can't afford to do this either?
Yeah, that's a very good point. The problem is that a lot of times we create a trade war, we create a policy, but we don't think about how to actually implement it correctly. That's something the policing of these is definitely going to be a key point. I know that you can look at data in terms of tariffs have come in and whether or not you believe the data in terms of how it's added to our GDP in terms of tariffs. But I think the key point to your first part of your question is like, who's going to pay for this? The problem is that when the trade war started, you saw a lot of prices were increased, for exports into the U.S. So we raised prices on say steel, we raised prices on other goods. Some American companies, though, instead of keeping prices the same to increase market share, what they did is they raised prices to match. And that's interesting. So I think who bears the cost of all this is us, the consumer, because not only are we seeing higher costs in U.S. imports, but now some U.S. companies, and I'll say some, I'm not saying all, some U.S. companies are raising prices to match that because it's an opportunity to increase profitability. So we're worried about that.
So either way, the consumer or the taxpayer, and we're both, are going to end up paying in the long run if there is a trade war with China. Again, you and I kind of agree that we don't think there's going to be. We want to get your future ball out and tell us about the future coming up in just a minute, how the rest of the year is going to play out. Before we do that, continuing with our foreign global market, how do you feel about the tension we're having with Iran right now? What do you think that's going to do to our markets and the world market?
Yeah, that's worrisome. I mean, this came out of nowhere. Yes, we've had slightly increasing tension, but I think the increased rhetoric, the increased the increased tension is really worrisome right now, because it's another front for the U.S. government, for Americans, that we have to focus on. I think obviously any type of war or anything like that is not good. We're not, of course it's terrible. I think that the immediate ramification you could see is an increase in oil prices, because obviously if there's a war, there's an attack down there, or that puts in question the movement of oil through the area. That's something we'll watch carefully, and you may see an increase in oil prices. But at the end of the day, the good news is that we're getting oil from other areas. We are manufacturing a lot of oil. We're drilling a lot more oil in the U.S. So even though oil, with geopolitical risk, oil last year was at $74 a barrel. Today I'm looking at my screen, it's about $58. So even given these increasing increasing tensions with Iran, oil has come down. It's stayed flat to a little bit lower. And, that begs the question, is this more the global economy issue as opposed to this one-off? To your question, again, we're watching this very, very carefully, these tensions in Iran.
We're on the air with Gene Goldman. We've talked to Gene many times in the past to get a market outlook, and we're at the mid-year point of the market to see how the rest of the year is going to play out. And Gene is with Cetera Investment Management, Chief Investment Officer. It was announced this week that Amazon Prime Day is now going to be 2 days, running July 15th through the 16th. It sounds like that the retail market, at least Amazon, who now dominates American retail market, they seem to think that we're going to have some extra money in our wallets come July and as we get closer to the holidays. What do you think?
Yeah, I can't really comment on the company, but I think overall it's a good point, because unemployment's at a 50-year low. You look at you look at jobs right now. Interesting. We've had 14 straight months. There's actually more jobs available than people looking for jobs. So this is good. This is good news for the consumer. We have 1.6 million jobs, more jobs than people looking for jobs. And then the other point is that consumer confidence is very, very strong. All this points to the fact that consumers have money to spend. The concern, though, is that retail sales, looking at all companies, both online retailers and domestic and traditional brick and mortars, given the fact that unemployment is so low, consumers are very confident. Consumer spending has not been, retail sales have not been that strong. They've been okay, but not that strong. So I think this is a plan for online retailers to come out and try to get some of the money out of our pockets.
And we'll see that more as we get closer into October, November, when we really start to see the earlier ads coming out for your holiday shopping. But it seems like Amazon, and I know you can't just recommend any investment, but Amazon seems to be leading the way right now, and especially with the Cyber Monday, and now they've got Amazon Prime. Bezos knows you got the money, and he sure wants his cut of it. Gene, thank you so much this morning for joining us. I know I got to cut you loose. You have another interview coming up. Cetera.com. Gene Goldman, Chief Investment Officer and Director of Research with Cetera. Thank you so much, Gene. Always great talking to you, my friend.
Thank you, Jeff. Great pleasure to talk to you as always. Thank you, Jeff.